Good morning, everyone, and thank you for joining today's AMA with PayPal, Paxos, and Crypto.com as we discuss stablecoins and PYUSD. I will be moderating today. My name is Joe Anzuris. I'm our General Manager for the Americas region and Global Head of Payments for Crypto.com. I've been working in payments for quite some time, so I'm excited to be moderating this panel. Been everything from B2B, cross-border, P2P payments for many years, mostly traditional payments, but excited to see the development that we've seen over the last several years with blockchain payments and stable coins and the many use cases, and continue to see the continued growth. Here with a couple of my esteemed colleagues from PayPal and Paxos. I'm going to pass it over to Edwin Aoki, the CTO of blockchain, crypto, and digital currencies for PayPal, to provide a brief intro. Edwin?
Hey, thanks, Joe. It's great to be here. My name's Edwin Aoki. I'm the CTO, as you said, of PayPal's blockchain, crypto, and digital currencies unit. We'd like to call it BCDC. We've been in this for about 3 or 4 years now, but I've been with PayPal coming up on 14, previously as the company's chief architect, and like you, been involved in payments in that context for quite some time. It's great to be here talking a little bit about PYUSD, our stablecoin, and the recent announcement that it's now available for use in payments on the Crypto.com platform. So thanks for the invitation.
Thank you, Edwin.
Ronak?
For that. And now let's on to Ronak Daya, who's the head of product and tokenization for Paxos.
Hey team, great to be here, and thanks for having me. Sorry, I was making sure I don't get kicked out of a room. But I'm Ronak Daya. I'm the head of product for tokenization at Paxos. Obviously, partner closely with the folks at PayPal and Crypto.com, and really excited to participate in this discussion today.
Great. Thanks, Ronak. And actually, let's stay with you, Ronak, if you don't mind kicking us off here, and let's talk about stablecoins at a high level. And if you can discuss what a stablecoin is for our audience today.
Yeah, for sure. As some of you might know, I'll put it in the context of Paxos, but get to overall stablecoins. Paxos is a crypto blockchain infrastructure company that's focused on tokenizing real-world assets and bringing them on-chain and driving adoption and distribution of those. Stablecoins were created in 2014 with the idea that crypto trading needs on and off ramps, and you need dollars to buy cryptocurrencies. And by tokenizing and bringing assets that are stable in value but benefit from all the technological innovations that come with blockchain technology, you create a way for people to be able to easily hold these assets in and out of trading other cryptocurrencies. They've since expanded, obviously, into a wide variety of use cases. Today, we see stablecoins at a $150 billion market cap, and we're still seeing adoption in the early days. Adoption of it is driven primarily by on and off ramp use cases, but we're just starting to see with the likes of PYUSD and PayPal stepping into it on how stablecoins, through their stable value, can now be used as core money movement rails.
Great. Thanks for that, Ronak. I appreciate that. And now let's flip over to Edwin. So, Edwin, what do you think has driven the need for stablecoins, and more granularly, what drove PayPal to launch PYUSD?
Yeah, it's a great question. As Ronak mentioned, stablecoins have long had a focus inside of DeFi and in terms of being able to tokenize, dollarized assets and other other fiat assets. But really, PayPal has been in the payments business now for over 20 years. And we were founded on this notion that digital assets, digital currencies, digital means of value exchange could really streamline the way that people interact with each other, could interact with their finances, and can interact with commerce. And so, for years and years now, we've been really involved in trying to bring technology in the financial services world together to do just that. So tokenization of cards in a digital wallet, software as a service, a lot of these concepts that we take for granted now in commerce were really pioneered by PayPal in the early days to allow people to get paid and pay others in a streamlined and fast and easy way. And when digital currencies really started to come out onto the scene and start to mature, we realized that that was going to be part of the next generation of financial services, a way that we could bring the speed and flexibility and ubiquity of the internet together with the movement of value and the movement of money, which was so critical to commerce. So, we started to work with cryptocurrency and digital currencies, as I said, through the BCDC unit about 4 years ago. And even from the beginning, we felt and knew that really the goal was around payments. And to do that, you need a stable form of value, something that doesn't necessarily, that doesn't have the volatility of some of the more popular cryptocurrencies out there, so that it can be used for commerce, so that merchants can be assured of the value that they're getting and consumers can be assured of what they're paying at any given point. And when we looked around, we felt that there was an opportunity for a stablecoin that was really geared towards these kinds of use cases, things that had the trust and security and the assurances that come from a large provider like PayPal, that have the strength and the regulatory compliance that Paxos was able to bring through its issuance, and would eventually have the capabilities that would extend across the PayPal ecosystem, as well as the rest of the Web3 and eventually the Web2 ecosystem as well.
Great. That makes perfect sense, and thanks for that, Edwin. And Ronak, would you have anything to add to that one as well?
Yeah, I think the thing I'll do is take it from the sort of the Paxos angle. And Paxos was founded on the idea that asset ownership today is cumbersome, opaque, and not transparent enough. And blockchain technology points to a better future where most financial markets over the next few years move on chain. And as that happens, adoption comes through existing financial rails that now benefit in a way where there are digital native products that drive adoption while making things better, cheaper, and faster. As it relates to stablecoins, we've focused our investments in bringing highly regulated assets that have a shot at becoming a payment trail, and PayPal has been a key partner in enabling that. As I see it, there are four, and Edwin started touching on a lot of this, but I see four sort of key necessary components that are needed for large-scale adoption of the next billions of customers that are going to leverage this technology. That comes in terms of technology and high cost, low throughput user experience. Is it really intuitive and easy to navigate and use? Trust and regulation. Do I now trust who's issuing this asset and how it's backed? And then for actual distribution and incorporating it into use cases. And through sort of our investment, we've focused on not only bringing regulation, but partnering with companies like PayPal that obviously can enable us to enable stablecoins to be leveraged in actual use cases with user experience that is easy and seamless, leveraging the latest and greatest technologies such that we can drive adoption of these assets.
Great. No, thanks for that. And definitely hit on those four key points. I think are definitely critical for the expansion, as you said, in the growth to continue to drive the billions that we're going to continue to see here in the marketplace. And Ronak, if you could expand maybe a little bit as well and explain the relationship between Paxos is with PYUSD a bit more for us. I think that might be helpful for the audience as well.
Sure, happy to. So Paxos is the issuer of the stablecoin. So the stablecoin PYUSD is issued by Paxos Trust Company, which has been issuing stablecoins since 2018. We're an infrastructure platform and technology provider to large enterprises like PayPal. Our role, as I touched on earlier, is to enable these enterprises like PayPal to build their stablecoins on top of our regulated infrastructure platform, which is agnostic of front-end usage and where the customers are coming from. As one of the only regulated trust companies that is issuing stablecoin. Paxos holds the reserves and provides the technology for PYUSD. These reserves are held in cash and cash equivalent US treasuries, meaning that customer funds are always protected, and these assets are redeemable one for one. And in addition to that, they come with the regulatory oversight that makes companies like PayPal comfortable and to put their name brand behind it and leverage it for real money movement use cases.
That, and now I think we've kind of gone through quite a bit of the infrastructure and background on stablecoins and PYUSD. Edwin, I'd like to flip back to you and get your thoughts on the primary use cases of stablecoin, specifically PYUSD, and how do payments fit in?
Yeah, as I said at the beginning, we created PYUSD in order to really facilitate payments. We felt that there was a tremendous advantage that could be gained by being able to bring the high speed, the low cost, the transparency and the programmability of digital currencies and stablecoins in particular, together with a robust payment network like we have, and bring that into the mainstream so that folks could really take advantage of instant settlement or near instant settlement, that they could make payments on weekends or outside of banking hours, that they could do that at very low cost in terms of the transfer fees that are associated with it. So, we've seen businesses building services to create cost-effective transfers across borders for both businesses and consumers. We think that PYUSD can simplify global payouts, eliminating the complicated network that exists today of regional bank accounts and correspondent banking, if you're familiar with those terms. We recently launched, as you know, on the Solana blockchain, and we think that this advancement will allow for microtransactions and streaming payments that allow for merchants to process and stream these transactions in real time at very low cost. We see that there is a tremendous activity that can happen cross-border for peer-to-peer payments. And we've recently combined PYUSD with our own Zoom remittance service that allows for customers to be able to redeem their PYUSD in order to fund their remittance transaction overseas and waive the transaction fees. And of course, we talked about some of the earlier use cases around Web3 merchants like NFT marketplaces and gaming platforms that are already using PYUSD and the on and off ramps that we provide to be able to move funds in and out of traditional financial markets and into this new world around Web3 commerce. But Joe, in light of the recent announcement here, maybe I should be turning this around to you. As we said, we're now available on the crypto.com pay tab there. What are you thinking about in terms of the way that stablecoins and the future of crypto.com sort of fit together?
Sure. Well, yeah, thanks, Edwin. It's funny, a lot of what you said, I would echo for sure, especially being a former PayPal employee at one point as well, more from the traditional payment side. But, at crypto.com, I guess we see stablecoins has emerged as a tangible application of tokenization, presenting a tokenized form of fiat money for everyday use on the blockchain. I think this innovation, facilitates a seamless bridging of value between the real economy and the blockchain, offering a standardized view of rationalizing blockchain transactions, and obviously increasing accessibility to trusted stablecoins like PYUSD. And again, I think you both hit on that as well. Trust is key, especially for launching anything new in the space, but especially new in this space. Trust is key, and it's foundational to move the digital economy forward in a responsible manner. But I would also say it also complements the crypto.com vision of cryptocurrency in every wallet. Which is, again, we're excited to announce PYUSD as an accepted token on our crypto.com pay product. And we see crypto.com pay, of course, as, that's really providing tremendous reach to the hundreds of millions of users globally, crypto users globally, I should say, that are able to leverage Crypto.com Pay for checkout, for different goods and services, for some paying friends, for B2B type payments. I think it's just going to continue to drive the marketplace and continue to increase that number. And again, so we can reach those billions of crypto users, in the next coming years.
Makes sense.
And now I'm going to flip it back to Ronak here and ask, as the issuer of PYUSD, how do you think PYUSD differs from other stablecoins in the market today?
I think we started touching on some of this. Thanks, Joe. As I mentioned, PayPal USD PYUSD is issued by Paxos Trust Company, which is a fully chartered limited purpose trust company. This means that PYUSD offers specific protections and oversight from regulators in a way that makes it different than other major stablecoins, which don't have this level of oversight offered by a prudential regulator. Our goal in creating PYUSD was to bring the highest levels of consumer protection in a way, as I mentioned, that enables PayPal to be able to seamlessly integrate this as a core payment rail in their ecosystem and drive adoption of the asset outside of the ecosystem. This means that PYUSD, as issued by Paxos, is a regulated product issued by a regulated company, which is not true of most other stablecoins or almost any other stablecoin. Our assets are always redeemable one for one as required by the regulatory supervision. Client assets are held in bankruptcy remote with regulatory oversight. These are held in fully segregated wallets and fully segregated from any other funds that are held. And this means that per our trust license, we cannot use customer funds to facilitate other business activities. We're required to minimize cash exposure at commercial banks, and we keep all of our reserves in cash and cash equivalents as required by our regulatory supervision. This means that as an end customer, you can be rest assured that your dollars that you're holding in PYUSD are always redeemable for fiat dollars one for one. And in any worst case scenarios, that they're fully protected and will always be redeemable. So the goal behind this is to create a level of trust where you don't have to just take anyone's word for it, but you rely on regulators who have established frameworks that provide you the highest level of protections and should give you the ease to be able to leverage this in any way you choose to.
Great, thanks for that, Edwin. I don't know if you had any comments to add there, or not.
Yeah, no, I think that you've nailed it. I mean, it really does, I think, come down to this idea of trust. It also comes down, I think, to this idea a little bit of usage, right? Because I think that unlike some other assets and asset classes, stable coins are really intended as a way to transmit and move value around. And I think that part of that is having the large networks. So PYUSD is the only stable coin that holders in the United States on the PayPal platform can use to pay at tens of millions of PayPal merchants right at checkout. And so if you're holding PYUSD on the platform, you can go into checkout and it's there as a payment source right next to your bank accounts and your credit cards. That's huge if you want to actually use that. We have as I mentioned, the on-ramps and the off-ramps that connect in to these other areas so that you can move that very quickly into a MetaMask wallet or a Phantom wallet with just a couple of clicks. So, we think that by bringing together that trust and that ease of use and connectivity, that actually allows stablecoins to be used for what we intend them for, which is to make payments.
Perfect. No, thank you for that. And I think and kind of just dovetailing off that as well, I'd like to hear from both of you as well. But we'll start with you, Edwin. Really thinking about how the audience should think about the difference between stablecoins versus other types of digital assets and cryptocurrencies in the market today.
Yeah, I mean, look, we're really excited about, cryptocurrencies and digital assets more broadly. We have a huge number of users on the PayPal and Venmo platforms that are using it to be able to buy and sell Bitcoin and take advantage of Ethereum and a couple of other currencies here, and are able to do that with the ease and convenience of tools that they're used to and the buyer protections that we offer for digital assets more generally. But as we've seen with the ETFs that were recently approved and launched, in many cases these cryptocurrencies are being used as a store of value. So they're really being used to accumulate value to be able to use as a hedge against other forms of assets. And folks are looking to that as a way of being able to take advantage of the market movements to accumulate and build wealth. And stablecoins are different, right? As we've been talking about the whole time, stablecoins are really about usage, about how do you move funds in and out, how do you transmit them very easily across borders or across accounts, and how do you be able to start using them as a way to pay for everyday things. We have seen entrepreneurs use PYUSD to fund their companies. We have seen people send money across borders to sub-Saharan Africa to be able to take advantage of being able to put more cash in their recipients' pockets because of the lower fees that come with that. We've seen stablecoins be able to be used for business-to-business payments and transactions, and these are things that are just harder to do with volatile and less regulated currencies like Bitcoin and Ethereum. So we think that there's room for both of these to exist, but we are really, really pleased with how folks are starting to use PYUSD and stablecoins really for payments, which is the whole idea.
Great. Thanks. Ronak, I'd love to get some of your thoughts on this as well.
Yeah, for sure. As I think Edwin covered a lot of it, as sort of we mentioned at the beginning, stablecoins are designed to be pegged to US dollars. I think they differ with cryptocurrencies in a number of ways. I'll sort of cover cryptocurrencies first and then come back to stablecoins. Obviously, crypto assets are being created every single day, and with more and more assets and the ease of being able to create assets, we're seeing tens of thousands of assets available at any moment in time, and that continues to grow. And it's great that there is broader adoption and experimentation, because I think that enables greater use cases. That brings in more customers and expands the overall ecosystem. So really excited about everything that's going on there. But each of these assets obviously has a different blockchain, smart contract, programmability, sort of market capitalization, regulated, not regulated, investor excitement. And for anyone that is thinking about investing in any of these assets, you obviously need to do a significant amount of research to understand the viability of it and the thesis behind any of it. And stablecoins inherently are designed to be pegged to a dollar. So they're not like they don't lend themselves well to speculation or trading in any way. Quite the opposite. They're stable. And that means that you can leverage it for all the things you use a US dollar for. As we've touched on it before, it's a spectrum. There's cryptocurrency more broadly, and then the stable coins. And even within stable coins, I'd say that there are different types of stable coins. Now, ones where there's stretched stable coins, or like things that are labeled as stable coins that are not quite stable coins, and then stable coins that are unregulated, and then regulated stable coins. And I think the idea behind PYUSD, as we touched on, is to take the guesswork out of it, to not only have the sort of technology platform and the strong sort of track record that Paxos brings, but have PayPal lend their name and use it and back it and use it as their primary asset, and leverage and know that you have the protections that are offered by a prudential regulator that has clear oversight over it. And so, as I mentioned at the beginning, it's a spectrum, and we think stablecoins lend themselves best to payments and money movement use cases, especially when they come with the highest level of consumer protections.
Great. Thank you both for that. That was very, very informative, very excited to hear. I think we got a good understanding, of course, of stablecoins in general and PYUSD and the many use cases. I know that we've gotten through this discussion so far. So, I'd like to again, kick it back to you real quick, Ronak, if you don't mind, and discuss, I guess what excites. Well, this would be for both of you as well. But what excites you about the state of the industry today and the future of stablecoins, especially like PYUSD, as we move forward and as we move forward in the space?
Yeah, I think when blockchain technology first was created, the use case that was always referenced was payments and money movement, and I think we're today closer than we've ever been in making that a reality. I think that, as I touched on, there are a few different ingredients that need to be true for that to come into place: user experience, sort of technological innovation, regulation, and a distribution platform / alignment of incentives. And I think we're getting there. We're getting there step by step, and PYUSD and PayPal have taken a massive step in pushing the entire industry forward. What I am most excited about is that promise being closer than ever. Historically, as I've mentioned, when people talk about cryptocurrencies, it's largely been driven by trading and speculation, and then stable coins have largely been used as an on and off ramp into that. Getting to a place and a level of maturity in the industry where large enterprises like PayPal are seamlessly integrating stable coins into everything that they do is what excites me the most, because I believe that we're still in the early innings of stablecoin growth, and as the market cap of stablecoins exponentially grows over the next few years, it's going to come by actual utilization of the asset, which couldn't happen without large enterprises like PayPal leading the way.
Yeah, I think, Ronak, you're right on there that we are really at a really exciting moment for us across the industry, right? I mean, I think that we've come a long way. Specifically with PYUSD, we are fulfilling our sort of promise from the beginning to be multi-chain through our launch on Solana, which really opens up, I think, a whole new set of lower cost and higher throughput use cases. We've got great partners like Crypto.com on board that are providing new avenues and opportunities to use PYUSD. But we're still very much at the early stages of the game. I think that we're just starting to see some really interesting use cases come up, things that are outside of what we have really been watching inside the Web3 space. And so, a week or so ago, EY announced that they're working with SAP on a pilot to be able to facilitate business-to-business payments with PYUSD. We're starting to see a lot of use cases come up, as I said, in the cross-border case, both within and outside of the PayPal ecosystem. And I think that, as these use cases become more and more well adopted, we'll also start to see them bringing in some of the newer technologies that digital currencies and stablecoins like PYUSD can enable. So, we're really looking forward to, as I said, some of these new micropayment use cases, things that are able to take advantage of Solana token extensions like confidential transactions, and really be able to start leaning into the programmability through smart contracts that really I think are going to unlock a huge set of really innovative things that allow us to do escrow or or logistics linked payments or more complex sorts of things that just aren't possible with the financial system today, and can make that better and faster and more inclusive for folks. So I think it's really a great time for everybody in the space. We're really appreciative of partners like Paxos and Crypto.com that are really helping to lead the way into the future. But it's just the start, and we're excited to see what people are doing with it. How about you, Joe? I mean, how does Crypto.com see the future, and maybe what you're looking forward to?
Yeah, no, absolutely. I think you touched on pretty much. I would again echo those as well. I mean, I think that what's coming in, I think it kind of goes back to Edwin, like, back, I remember in my Hyperwallet / PayPal days, and, back in like 2016 and 17, getting the interest from businesses that were wanting to receive crypto payments. So, seeing that evolvement from there to where we are today, and to what, some of the things that you mentioned with like escrow and things like that, treasuries, right? And, different much of the treasury business today within B2B, I think, there's a huge opportunity there as well that's already been kicked off and started. But just seeing that evolve and grow is kind of where I'm excited to see the next use case, or the use cases expand, I should say, for stablecoins. So that's for me, I think that's kind of where we're going to continue to grow that the billions of AUM, in addition to the billions of users that will eventually have with cryptocurrency in their wallet. So that's where we're excited, and I would say that's what I'm excited to continue to see, and continue to see the growth there. And again, I do appreciate the partnerships with you guys. It's been fun. It's been exciting, and you get great partners as we continue to grow in the stablecoin space here. And again, I do want to thank both of you for your sharing your insights and your time today. Really do appreciate it, and I think it was definitely very informative for our audience.
It's a bunch of fun. Thanks, Joe.
Yeah,
Thanks,
same.
guys.
Thank you.